This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. If you require investment insights or wealth management, patrickmleonard.com is the website where you can go to reach out to Patrick and connect with him for all of the above. And welcome to the Wealth Roundup for the week of July 17th, 2026 with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. It's episode number 50 today, Patrick.
Yeah, I was telling somebody, one of my clients I hadn't talked to in a while, that we'd been doing the podcast for over a year. But I'll have to admit, I got a little muddled about which exact podcast number we're on. In my mind, I always kind of eliminate the first podcast, the so-called pilot, because it wasn't maybe my best work. You were fantastic. It was me, not you. So yeah, it's once we got into double digits, I was excited. So to be at 50, it's a monumental number for sure.
We're cooking with gas now, that is for sure.
Yeah.
Lots of stuff happening in the news these days. I think inflation was a little lower in June than they expected. There's some stuff happening with the geopolitical business. Oil has bumped up. How has all of this stuff this week affected the markets?
Yeah, often you run into like the summer doldrums. People are booking holidays. You've got kind of short weeks. People are loading up the car, taking the family off to the lake, and that can certainly roll into the financial news cycle. But it's been anything but boring. There's been lots to talk about. In generally, we're expecting inflation to run especially hotter in the U.S. And, that's going to be something we're going to have to watch on for the rest of the year, because I think it's going to have lots of ramifications of that higher inflation number. If we go back to the beginning of the year, we were counting on U.S. inflation to be trending down, not up. Topic for another podcast. Obviously, reignited tensions in the Middle East. And so we see oil prices, up over 12% for the week. But, we see the markets continue to roll on. So, both the U.S. market, Canadian market, positive today. Both of them are up either a half a point or a full point difference between last week's podcast. Gold has stabilized up a little bit. So, I think we talked a little bit of that in the podcast, whether or not gold was going to give back, a lot of those gains, because it really kind of seemed to be in a bit of a free fall, but gold has stabilized. We're sitting around 41.21 US an ounce. And then even Bitcoin, just kind of very quietly has kind of posted about a 2% gain since last week. So again, continuing to kind of stabilize in that low $60,000 US range. Today sitting at almost 65,000 US. So we're going to have lots of earnings. So earnings season has kicked off. And I've always talked about how, forward-looking earnings, so that guidance. So it's really important, what businesses have done for us in the past. That will kind of explain why stocks have perhaps what they've done in the past. But really, when we want to get a good idea of what stocks are going to do for us in the future, is we're really looking for that forward-looking guidance. And we've kind of talked about in the podcast before, we expect this earnings season to be really strong. We're expecting, just looking at the U.S. market, so as looking at the S&P 500 as a benchmark, we were expecting year-over-year increase in earnings of well over 20%. Already, we're seeing early indications that we may see more than that. So Goldman Sachs came out with a huge beat today. And so U.S. financials, U.S. wealth managers, all expected to be really strong.
Let's talk about, on every one of our podcasts, for the most part, we've talked about the markets, and then we delve a little deeper into another topic or something that's related in some way to the markets. Let's talk about economic productivity. First of all, what is it, and what point of view are we looking at it from, and why is it important?
Yeah, so what productivity is it's a measurement of how much goods and value workers produce with an hour's worth of work. And so this is going and comparing, say, Canadian workers versus US workers, or Canadian workers versus European workers, and maybe Northern Europe versus Southern Europe, and China, or in Korea. And I think it's really important because there is a strong correlation with standard of living, quality of life, and workers' productivity. This is probably a debate for economists, but this could be one of the things that we look at in terms of what is Canada's standard of living going to look like versus the rest of the world in the next 10 years, based on how productive Canadian workers are. It's probably something that we haven't really thought about that much, but I would say it's something that we should look at. And I think that probably it is being debated right now, although we may be not using these terms productivity in terms of the way that we debate it. Productivity, if we looked at Canada, the United States, productivity from about 1960 to 2001 was almost identical between Canada and the United States. So we're producing about the same amount of goods per hour worked, for whether or not I was a Canadian worker or a US worker. But since 2001, US productivity has been more than double what Canadian productivity has been, the increase. And so we've got this gap that is created, this productivity gap. And so, as I was indicating, I'm creating this connection between standard of living and this productivity gap, and why it's so important. And we have been lagging. And why this is so important is it's not something that you can immediately fix. But where we see it is that if productivity is keeping up or it's improving, then we tend to see wages increase. We see businesses being more profitable. And this is a podcast about wealth and wealth creation, so this is why it's important. Governments actually collect more tax revenue without increasing taxes. And in general, households enjoy a higher quality of life. So, why does this gap? Why has this gap occurred? Well, that's a big debate, and I don't want to go down the political rabbit hole in terms of why it has occurred, but it has occurred, and it's been occurring for more than 20 years. It's probably more important that we talk about how we fix it. And so, generally, what we need to see, and these shouldn't be too surprising, is that we need to see a greater investment in businesses. So this is basically giving Canadian workers better tools to go and do their work. And so a lot of this is technology adoption. And so, sometimes I think everybody gets kind of burnt out talking about AI, but we probably had the same thing when we were initially talking about the internet, back in the 90s. People get kind of tired talking about that internet thing. Well, now we're maybe getting a little bit tired talking about that AI thing, but AI is really a productivity tool. As we see these better tools becoming available, well, now we need to see the adoption of it being used by workers. So yes, workers in, say in my office, is that we have Copilot, but are we using Copilot to be more efficient? Are we using it to produce more value in every hour that we work? So that's important. I think that one of the other reasons is about scaling this up is that in general, businesses in the United States are bigger than Canadian businesses are. It doesn't mean that we don't have some very large companies in Canada, but we've talked about the Nvidias, the Apples, the Microsofts, the Metas, the Teslas. These are gigantic businesses with trillion-dollar market cap. Canada doesn't have any businesses of that scale, but you can imagine that if you're improving your productivity per hour worked and you're a bigger business, that business is going to create more value over that period of time. Competition is actually a very good thing for productivity. So if we look at industries where there's little competition, is that you're not going to see this incentive to become more productive. And lastly, something I'm a big fan of is just better education, more skills training. These are things that are probably one of the easiest ways to increase productivity, is skills and training, how to use these tools, how to take modern innovation and make ourselves more productive. So, when we think about what we create per hour, it's not so much about working more hours. It's really about creating more in that every hour that's worked.
You mentioned the difference between the gap between the United States of America and Canada, especially since 2000 or 2001 up until now. What about the rest of the world? Is there a really big gap between Canada and Asia, Canada and Europe, or is it more focused in rather than just regionally? Is it per country that we look at things that way?
Well, and this is probably maybe even the more disturbing number. I don't think it's maybe surprising, that the U.S. The U.S. economy is kind of really set up. We talk about corporate America, we talk about the American dream, and a lot of that has to do with American capitalism, American entrepreneurship. It's something that's very valued in the United States, probably more valued than here in Canada. So specifically, how are we doing versus, say, some of our other trading partners? And I think this is maybe where the problem is more highlighted, is that when we look at, say, some of those other European countries that we tend to maybe benchmark ourselves more against, is the productivity gap between, say, Canada and Germany, and Canada and the UK, and Canada and the Netherlands, is we're falling behind these countries as well. And so it's not necessarily that German workers are working harder than Canadian workers, but the data suggests that they are creating more output in every hour that they worked. Now, as I say that, is that Canada is still a very wealthy country with a very high standard of living. So the Canada productivity versus, say, emerging markets and some of those maybe Southern European countries or Eastern Europe, is that we're still more productive. But I think some of those other major, say, Western economies, Northern Europe, is that we are losing ground. Japan has always been a very productive economy. We've always lagged against Japan, but a lot of countries have lagged against Japan. It's a very modern country, very innovative, very quick to adopt technology, high output per hour. When we look at, say, Canada versus China or Canada versus India, is that we're still much more productive. But when we look at, say, a country like China, is they're catching up. And so I think that that's something to take away. And so one of the other reasons why I wanted to talk about this in today's podcast is that there's a connection between, I think, the next leg of AI that's very important to our investment thesis. Is that right now, if we look at the U.S. stock market, or the S&P 500, the greatest volume of earnings coming off of S&P 500 businesses is largely due to business investment, business spending on AI infrastructure. So whether or not that's buying chips or building data centers or creating all of the new energy infrastructure to run these data centers, that private investment from those US businesses is one of the major factors that's keeping the US economy so strong and keeping that where we can kind of look towards the future and say, there's going to be continued investment. What we're not seeing yet, but we're seeing maybe a trickle of, is the added productivity that is coming from this investment. And it will be that added productivity that will broaden out the earnings growth to other businesses. So businesses beyond information technology businesses, to businesses in financial services, manufacturing, healthcare, and maybe even resources, as those businesses adopt this new technology to become more productive. And so this is important because we've effectively had a bull market in stocks really since about 2023. And as investors start to say, wow, this market's looking really good, when is it going to roll over? It always rolls over, right? Well, we have this high level of business investment that's occurring right now. And I would say it's the decisions you make now that have an impact on the productivity level 5 years from now. Where we're at today here in Canada is because of decisions we made 5 years ago. And so while we can't turn around the horse cart immediately, there are things that we can do to increase Canadian productivity. But with investors wondering about, what can we expect from the markets in the future? Well, if we see this this technology and innovation broadening out to other businesses beyond information technology, this rally in stocks can actually last much longer.
And like you said, education's so important. Never stop learning.
Yes,
Even if
100%.
you're an old guy like me, learn about AI and how to use it.
100%. Yeah, we shouldn't be scared about it. We should definitely connect this to our standard of living and to be able to compete, so that Canada can compete with the rest of the world.
That's right. For wealth management, to perhaps start your investment journey, you can find Patrick's contact information at www.patrickmleonard.com. That's the Wealth Roundup, episode number 50 for the week of July 17th, 2026. Thanks, Patrick.
Thanks, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.